Since Friday, Bitcoin has dropped 10%, 9,300 bucks after it was rejected at $93,000. And just in the last 24 hours, it's got a massive hammering, down nearly 7 grand and 7% on the day. Now it is closing a little stronger, and there's still the chance that the relief rally continues on and potentially it turns into another bull leg. But I've got a lot to cover to get things up to speed again with you guys today, along with the time frames as we've seen throughout history when Bitcoin breaks down from the 200-day moving average, essentially what happens next, whether it's in a bull market or whether it's in a bear market. Make sure you hit the like button if you have found value from the content over the last several years, as we've brought you multiple bull markets now and multiple bear markets. Subscribe to the channel, of course. Let's dive in as we approach the peak of the 18-year cycle and that massive capital rotation that has been continuing. Okay, so as we've covered, Bitcoin down now 10% from the top to the low in the last few days, and the volume has also increased on this latest drop. That's the highest daily volume that we've seen since the low that has come in. Now, there are a few other signs of the potential of the low, but it's not just showing up in Bitcoin at the moment. Now, in the next couple of weeks, we've of course got the interest rate announcement. That's within the next 9 days or so. It seems like the market has begun or has already been pricing in the interest rate cut after it was looking like there was going to be no cut, and now there is a cut. Either way, it seems like the stock market and of course the risk on assets, in this case Bitcoin, it's not going to make too much of a difference if there is a cut, because I think the market is expecting this. What would probably shock the market is if there wasn't a cut after much of the market has been pricing this in. So a simple way to look at that is no cut, possibly bearish. Cut, everything is what the market had expected. Look at that, balloons. And a double cut, so a cut of 0.5% as opposed to 0.25%, that could be extremely, well, it would be bullish. I'm not going to say extremely bullish, but it's going to be a little more bullish there, at least for the markets. Okay, so we got that coming up. And of course, in December, there is also QT ending. But as we've talked about many times before, it doesn't mean that QE begins, so quantitative easing begins. This is quantitative tightening, and it doesn't mean that quantitative easing automatically starts. That has been the assumption of the everyday masses. We've seen it across the media. We've seen it on crypto Twitter and financial Twitter and everywhere else you can look for information. The same thing happens time and time again. People think that as soon as the Fed stops decreasing the balance sheet there, they're just automatically going to start. That's not the case. We've seen it throughout history. So we have to wait to see what happens with that. But can Bitcoin continue to run, or at least run into a relief rally, giving us some, of course, relief to the upside, even if the Fed isn't increasing the balance sheet yet? Now, throughout history, we have seen breakdowns of the 200-day moving average, and then what has led to rallies or breakouts again from that point. Now, we've covered this, but we've got to bring things up to date because of the time frames leading into that particular projection. From this breakdown, here it is on the 3rd, we looked at this with our members in TIA, the Investor Accelerator, link in the top of the video description. This is a post I did in November, early November, that's the 3rd of November there, and we talked about it in our live streams that we do together on a weekly basis before that 3rd of November as well, because we were beginning to see a Wyckoff distribution breakdown. You see the dates at the top left, and I'd gone through and labeled in all of the events for that Wyckoff distribution. Of course, at the times, you don't know if it is 100% going to be a distribution or a reaccumulation. We had our thoughts that it could be a distribution, so we got to play the game defensively at this late stage of the cycle. We had our last points of supply right here. They got rejected at 116,000, so that was the key level they were watching, and then the market began to break down. And so after we'd mentioned that and talked about it with our members, covering how this happens, then Bitcoin has gone on, that was right around here, Bitcoin has gone on to break down from the 200-day moving average. It broke down from our 50% levels. There was a little rally in there as well. But overall, that weakness really began to accelerate from that breakdown of the Wyckoff distribution. So a good thing we caught that there and talked about it, and then obviously this is where the markets ended from this point. So when Bitcoin has broken the 200-day moving average, we can look at it in bull markets and in bear markets and look at rough timeframes here. Now, the timeframes from the I guess, confirmed breakdown, at least the way I like to look at things, and then we measure a date to when the market breaks back above the 200-day moving average, has had a pretty regular occurrence here of about 80 to 100 days. And so the way I'm measuring it is, this market's been above it, in this case, above the 200-day. Then you get this breakdown. There is a lower close. Here is a candle, if you like the look of candles. And look at the volume. The volume's also increasing, which is telling us that the sellers are stepping in to a greater effect than what they have done in the past, and they want to try and push it down below the 200-day. And there was a couple of attempts above it, but it wasn't until this day here that it broke above and didn't see the light of the 200-day below the 200-day again until the next time. And that was quite a way away. Okay, so it was many, many months. And so that breakout also, another way that we measure it, it was also occurred on increased volume, nice strong breakout, and the close was above that level. So we want to see the buyers stepping back in. Basically, where is the positioning of the market? And the market is telling us there is a lot more buying happening going on because obviously the volume's increased and it's higher than what we've seen in the past. That's a good sign, more buyers stepping in than typical. Now, on top of that, there was many other signals that we covered on the channel at the time. You may have remembered there were some higher lows there. If you did, hit the like button, let us know, comment down below, because this was the part that we were going through in late 2024. So that's 100 days. We've also seen 60 days. We've also seen 40 days, 80 days, 90 days. How do you make sense of any of this? Well, we like to look at the averages to give us an idea of how long this may take. And so we can go back to 2018, and it was a similar sort of thing during the bear market. And the bear markets have been a little more consistent with that timing than the bull markets have. As you can see with the bull markets breaking and then getting back above that level still in the bull markets. That's the early stages of the bull market back from 2019. That was 124. Then there was another instance here of 52. Add the two together, gives you nearly 180. Divide it. Well, you got two options there, so you got to divide it. There you go, an average of 89 days. You got another one here, 82 days. That was in the bull market. Another attempt, and higher you go. 42 is half of 90, another nice 50%. And then you had the 88 days here, the breakdown, and the breakthrough, then the breakdown, giving you basically the 90 days again, right below that level. And then we get to the bear market, and this is where it becomes a little clearer. The 90 days, there's the breakdown, and here is the test of the 200 days, 90 days later. So we now have an average there of about 90 days. And the last bull market, or the 2018 bull market, also had a couple of instances here where you had a breakdown of the 200-day, a retest that lasted 89 days until it tested it and then fell away and did not get back above the 200-day for the entire bear market. Another instance here, roughly 90 days, the last peak, or you could say it was 80 days, divide them by the two, you're roughly 85. So you're still in this 80 to 90 day time frame over and over and over and over and over again. So I think it would be prudent to watch this 80 to 90 day time frame. If we take a look at the 80 to 90 day time frame from the breakdown point, that takes us out to 1st of Feb. So late January to early February, a good time to have a look for any sort of recovery into the 200-day. Of course, leading into the 200-day, most likely this is going to continue to fall. And if it does continue to fall, we could end up with something like a 104, 102, say low to mid $100,000 BTC over the next 2 or so months. And that's just looking at historic data, things that have happened before continue to happen again. And there's often the kickback or the the pushback from people saying, this time is different. We've got institutions, we've got money printing, we've got Fed stimulus, we've got $2,000 check, we've got all this like extra money coming into the system. This time is going to be different, and we should expect the prices to rally higher. Maybe that's the case, but I think what I'm doing at least is keeping all of this history on my side. I'm watching the history, and if things are different this time, great. We're also aware of it. Let's play that game too. But of course, I think it's far more important to play the game that history has shown, because again, history has shown very similar patterns, just like it has done with MicroStrategy as well. We've seen MicroStrategy fall from the highs. It put in lower highs while Bitcoin was putting in higher highs. You can see here, Bitcoin put in an all-time high in July, also put one in August and October, which is right here, sorry, before MicroStrategy again fell out of bed. And just like last cycle, you got February 21, but we know the all-time high for Bitcoin was November 21, lower highs. And so when we take a look at the pattern, generally around this time, MicroStrategy goes on a relief rally of its own, which also may be helpful for Bitcoin as well. Check out the buying that has come in the last 24 hours for MicroStrategy. This little white line down below that you see here, that is the buying. And we have a nice reversal bar as well on today. You've got the market selling off, so the amateurs controlling the open, the old saying, amateurs control the open, professionals controlling the close. The amateurs sold off, the professionals bought back and closed higher. Now, professionals aren't necessarily going to buy and hold like retail traders, like hopeful traders. They don't just buy the dip and hold and hope that things go higher. For one, most of their funds won't allow them to do that. If you start to see reverses, if they start to see drawdowns of more than whatever percentage that they're allowed, they have to sell the shit. So just because they're buying the close doesn't mean they're going to hold forever. They might see this as an extremely oversold market, extremely oversold territory. Therefore, they see it as a good buying opportunity at this stage. And you're right around the previous area that MicroStrategy had fallen into last cycle. Look at this, fell down. And again, we've covered that. You can see it fell into the breakout zone. So late 2020, pumped higher, pulled back, took off. Now, MicroStrategy has collapsed after the all-time high, right into, look at that. That was the breakout zone, and it did it again. Here it is. This is the breakout zone again. There's September 24, October and November broke out there. And it also happened earlier in the cycle. Here is the breakout in February into that March top, and then we had that consolidation. So the price is back into the consolidation of the first breakout, and generally, if we look at the last cycle at least, you'd expect some sort of relief rally. Now, it's a pretty good traders market. That's about a 70% move, low to high. There you go. But it doesn't mean that it's a great buy and hold, because history has then showed that it's gone down lower and fell into a final low. It took a little while to consolidate before things started to go again. So that's the good news, I guess, is that there still seems like there's a very, very oversold market. MicroStrategy is also showing that at the moment. Doesn't mean that it has to form, but you just got very early signs of it. When things are early, it increases the risk that it could be wrong, but it gets you in closer to those lows, which then means your dollar risk should be less. So there are all the risk strategies that come into play around these lows. It's not just a simple buy and hold, buy the dip like we typically hear in the retail space. There are many strategies going on through this whole period, and just because it's found a low doesn't mean that it is going to be the final low, and it doesn't mean that these people that are buying, or smart money or whoever, right, doesn't mean they're going to hold indefinitely. They have targets to the upside that they're watching. They're watching momentum indicators. They're watching everything that we watch, except typically they'll take action on it because they're not interested in holding for the long term, as we have already seen multiple times in this market where it has come down. Now, the other thing with the low, which was a good news, or at least bullish news, is that MicroStrategy, this one isn't the bullish one here. Here is the bullish one here. I'll come back to the other one. MicroStrategy's price, or the market cap, actually fell below their holding value of Bitcoin. So they had something like $50 billion worth of Bitcoin. Yeah, we've got the chart here. They got 55 billion. Their market cap was about 45 billion. If you take away the debt that they're holding, this 8 billion, you're still 1.4 billion at that price at the low. There's still 1.4 billion underneath their actual assets. So the value of the company with the assets they're holding with the price of Bitcoin, you could still make 1.4 billion if you just completely liquidated the entire company. Of course, that wouldn't happen with Bitcoin because you'd lose it in slippage. But taking it at face value, the stock price was pretty much underneath the value of their assets. And so we've also seen that happen today. Fantastic volume, nice reversal bar. It's closed above the previous lows. It's back into the breakout zone, just like last cycle. Bitcoin's also pretty well oversold here. And typically, we've seen relief rallies last up to around that 90-day mark, which takes us out to late January, early February. So we're seeing a few good signs here of a potential relief rally that could last us into that time period. We won't dwell on this too long because it may not even happen, but just something to be aware of. MicroStrategy admits a Bitcoin sale is possible. Here's when. So they're acknowledging the company could sell its, some of it under specific crisis conditions. So, don't need to worry too much. They've got a never sell philosophy. If these crisis conditions come up, then let's worry about it then. But for now, I think it's just something we need to be aware of, because rather than get blindsided by the market that MicroStrategy is always going to be buying the dip, there may come a time where you can't. What happens when you run out of money? What happens when investors stop giving you money? And that time always comes. There always comes a period where people just get too fearful and they stop. That's typically around lows. So I think time is still on our side there. Let's keep watching it as we move into a possible low. And this was the low forecast that we're still tracking for Bitcoin and cryptos, looking at XRP, ETH, and MicroStrategy in previous cycles. So we've seen tops now for these markets around mid-year. And in the case of MicroStrategy, which is in the orange here, that was around November. That was for the price high. And of course, their closing price was June and July. So you've got these nice tops all forming around the same time for each of these markets. MicroStrategy, ETH topped around August. XRP topped around July. So you've got this Q3 top. And in prior cycles, in the case of XRP, it's run down 12 months from this point. So July top, let's have a look at the July low, Q3, July, August, September, around that period. Obviously, be on the lookout in Q2. Maybe it runs into Q3 like last cycle. You can look at MicroStrategy. It dumped into this low here in June and then had another low in late December. So roughly 6 months apart. It was all consolidation, which eventually turned into accumulation. There's some good news. And for Bitcoin, very similar as well. Look at this June low that dumped here into June. Consolidation, FTX happened, big flush out. Another low around November, December, and then breakout in January. So you just got to be very, very patient through those periods. And then we get to the next stage of the bull market. Okay, so that's a look at the lows. In the case of USDT looking for any sort of relief rally here, for Bitcoin and cryptos, as I'll get to, we're still seeing tops forming for USDT dominance in this stable coin bull market. Okay, so we're up around that 6.5% resistance level, because as you can see here, it was support, and we had resistance in January 24, resistance August 24, slight resistance here in April 25, the tariff crash low. People sold off everything, and of course it moves into stable coins, giving a stablecoin pump. And then November 2025. So we have a nice repeating cycle here. January 24, it's roughly 2 years apart for these tops. Okay, last cycle, similar things happened. We had all these tops, and then we had pullbacks on stablecoins that led to relief rallies for Bitcoin and cryptos. Relief rally, that's the major one in question here, because we had the dump in January and then a slow grind higher for Bitcoin into the March top. So this is the dump here, that's January, slow grind into that March top, and then things fell out of bed, came into line with the 200-day. Again, maybe we're looking at that into the first quarter of 2026 before things potentially fall away again. That was on the USDT, so we're up around that. The thing that would essentially collapse Bitcoin and cryptos would be a strong breakout here. Breakout and closes above the 6.5 level. And just for a bit of fun here, we've looked many times at the 666 number as basically the death there for crypto. 666, obviously it's around 6.5%, just something that you can easily remember there, because if stablecoins keep breaking out, there you go, stablecoin bull market automatically means a bear market for Bitcoin. So can Bitcoin still keep rallying to the end of the year? Well, we've still got some strength here for the S&P 500. So if we still have that strength, I suspect it may not be as fearful for Bitcoin. I don't know if it's going to be as bullish for this major bull market. But yeah, the 5-year cycle for the S&P 500 that we've been tracking for months has continued to play ball after that little scare there in November, around that period where it just touched the low and it's bounced back. You can see it's up again with the red line, which was the 5-year cycle, holding very similarly here. And a few pullbacks, a bit of a grind higher. So nothing too crazy. It doesn't look super clean, but at least it is on the uptrend here. And Bitcoin could be following a similar path when we look at the 2022 fractal. So this fractal right here is from 2022, that grinding period, until it starts to push higher into that final top. We're so far very early into it. We had a few days up here like last time. We've had a pullback like last time. Do we start to see this thing rush higher into December? Obviously, I hope, but the difference between hope and what actually happens, two different things here. But we have some good signs that there is the chance, I think, a higher chance that we could continue this rally with the volume, the push lower, the nice higher close. So you're basically getting a nice sell-off there to flush out the rest of the sellers at least, and then they've got to start buying back. You can see this reasonable close coming in to the end of the day with some pretty good volume as well, above the average volume. So ideally we start to head higher as well. As for altcoins, well, they keep heading lower. It's been day after day after day after just touching a little high here at 7.6%. This is the others chart. So this excludes stablecoins and your top 10, essentially all of the altcoins. Hopefully not your altcoin, hopefully everyone else's altcoin, but this is just the reading for the overall market. You're at 7%. Be worried if we start to see things break down from 6.5% here, as that would then take out the prior lows, and that would essentially continue the altcoin bleeding. You can see alts excluding stablecoins and Bitcoin and ETH. They're also underneath their 50% for another day, just hanging in there with a couple of higher lows. So closes underneath 480 billion would really set this thing up for another big move to the downside. 450 billion, 410, 350. There's a few little areas here, but that's going to be a pretty long way when you look at it in terms of percentages down to those lows. Another 20 to 30%. If it gets to 480, and from this current price down to these lows, that's about another 30 to 40%. So a bit of a rough move there if that is to happen, and it has closed underneath 50% after putting in these lower highs. Hopefully you get the relief rally here based on what we've seen with the USDT, based on what we've seen with the stock market also climbing a little here, and also based on MicroStrategy potentially putting in a short-term low here on the back of what we're seeing with the Fed and the whole QT thing coming to an end. Ideally waiting for that QE, all that stimulus that everyone has been promised in the meantime. So on the flip side, on the plus side, let's see if we can get a breakout of $94,000. That's pretty much where these previous tops were, to at least start to stretch it into those low 100Ks. That'll get people really excited again. And all those perma bulls and bulls that think that this cycle still has further to go, that's going to get them pretty much on the bandwagon to say that things are going to head to that 150. So stay level-headed at this stage. I don't think this is the best stage to be taking one side or the other like we looked at before. Be Bruce Lee in the middle, float with water. Don't be Peter Schiff and say it's all going to shit. And don't be Michael Saylor thinking that it's the next bull market to $1 million. This is not the time to be that delusional. The delusion at this stage is going to destroy people. Like and subscribe. I'll see you guys back here with the next update. Cheers.